What is going on? It is Wednesday, August 30th, and we've got a trade recap video. Finishing the day up $103. We had 4 trades. One was break even, 2 were about a $50 loss, and then one was roughly a $200 win. So pretty good in terms of risk management today. I want to kind of cover some of those here in a second and walk you through kind of the thought process behind each of these trades. I'm not going to really dive into the Apple trade here. I'm just going to waste too much time. This was a position that I had taken because the chart looked good. It was midday, which, you know, everyone says. You hear a lot of people who say, oh, you know, don't trade midday, it slows down. I don't know if I have the data to back that up, and I'll talk more about that in the next video, which will be my August trade recap. So I don't have the data, at least that I had going into this month, to tell me don't trade during that time. So I would just trade when a setup is valid. So that's why I took it, but I quickly moved my stop loss to break even once it went my direction, and then eventually stopped me out. So that was the deal, but we came out on top, and it's a pretty good day in terms of risk reward. So let's dive into some of the charts. Now, I started off at SPY. Now, here's SPY. I have a blue line right here. That was the spot that I was looking for a trade. And, or I believe that was the original spot. Yeah, it wasn't the spot I looked for a trade. That was actually the original spot I was looking for a potential trade, and that would have been good in the open, but it was just a little too early, and it wasn't a perfect setup for me. I just didn't like these lower wicks. I just didn't like what I saw. So I prefer to let things play out, get some more time, and then play it from there. And I ended up playing SPY later on with a break of this high. I liked this as a nice push up into highs, almost a bull flag type of setup. Essentially, it's a look of a way you could kind of picture a bull flag, if you will. Everyone's going to have their own different definition. There's different ways to draw them and all that stuff. But for all intents and purposes, for me, big move followed by consolidation, and then break of that consolidation high is what I'm looking for continuation, for momentum. Now, in this case, my stop loss was here. We got the break, and then immediately went against me. And good thing I had a stop loss because we had a massive move down. You know, do you want to hold it? Yeah, of course we did. Technically, it came back. But, you know, do you want to hold all the way down? No. You don't want to bag hold that. I kept the stop loss pretty tight, and it was good because it needed to be, and it was. I mean, like, this consolidation was tight. So once we broke that consolidation to the downside, that invalidates the upside move, in my view. And so that's where my stop loss was. So it only ended up being about a 5% loss on the SPY trade. Double check. I think I had about a $900 position. I try to go with around $1,000. Again, every contract is not going to be perfect, like what I'm looking for. So these contracts happen to be, somewhere in the mid 4s. So it ends up being a $900 position size. But I'm still looking to risk about $100, worst case scenario, and then I'm targeting 100 plus. In this case, the chart setup allowed me to risk less, and so I took the loss for $52 there. The next trade on the list here is NVDA. This is at 9:44 a.m. Now, I am in Central Time, so just take that into account. This was here. So here's where I got a little wonky. I'm not super happy about this. I could have avoided this loss. The trade that I was looking for was this. So essentially same thing. Big move up, consolidate, break that consolidation high, and go. And that's what we got shortly after on NVIDIA. The problem was that I initially entered this one kind of like an anticipation entry, and then I had my stop loss below these 2 lows, which then, kind of like the SPY trade, I kept the stop loss pretty tight, which then stopped me out right here. Only for it to stay strong and then eventually break. The problem here, I took it before the break. So this could have ended as a day down 100 and whatever, 100 and change. I would have lost twice if NVIDIA never came back, or if NVIDIA never broke that level. So back to the chart, or back to the trade, I guess, log here. 9:52, I entered NVIDIA again, and that one goes for 21%. That was this candle right here. So this actually was a nice pop in my direction. Then it consolidated at, just actually broke high of the day, then popped here, and I actually got out somewhere up in here in one of those 2 candles. And then it came back. It even went higher, but momentum at that point in time. The high probability momentum for me is that initial first 20-minute move, maybe 30 minutes. And then if it trends from there, great. In this case, it kind of did, but I locked the gains in. I was up pretty nicely, pretty quick. And so I decided to lock that in, knowing that, hey, I had already taken some losses today. I'm going to lock this in. I'm not going to overstay my welcome, and I'm going to walk away. I got the move. So that was the deal. So the moral of the story here today, I view it as you really have two trades that, one of them I did not need to take, so I technically could have avoided this $50 loss here. But either way, you have two smaller losses and then you let your big winners go. I mean, if I'm trading my strategy properly, this is how it should work, right? The losses should be smaller than the winners when things work. And so it's now being patient. This was just a time of I was not patient. I wasn't patient on the first entry, was on the second. And if I had just been patient in the first place, waited an extra 7 minutes, I would have had just, two trades and done for the day probably, and that's it. And then Apple later on. Here's the look. I'll just quickly mention it on Apple. Here's the look I was looking at on Apple. This break right here. And as Apple popped to the upside here and went for a pop. And then I ended up, for whatever reason, this trade, I left an order on. So I get in. I had a target for my contracts, which was about 10 to 15%, I believe. Which, because this move was not like crazy, just straight up, it was a choppy move. The contracts had decayed, so I targeted like just above the highs of where the Apple contracts for next Friday were. And so even though we did break high of the day, we technically on those contracts did not make a new high of the day because the move was not as strong of momentum and as parabolic as earlier. So it ended up not getting there and then eventually coming back down. But I had moved my stop loss to break even, so I left it in and it eventually came back down and stopped me out somewhere in here. And that was it on Apple. So it could have worked. It just, realistically, this is a trade that I should not have lost on. So I made sure I did not, but it didn't hit my ultimate targets that I was looking for, like of 12 to 15%, which, probably could have just taken my 10 and walked away. But it is what it is. That's how we wrap up the day. This will be the end of my August trading. I'm going to have a video coming up soon going over the entire month recap where I dive into what worked, what didn't, times, stocks that were good to me, all these different things, unraveling kind of the data. This week we finish up $233. And for the month, you'll see in the next video, we are red, but not as bad as it maybe looked a couple of days ago, or how it maybe had looked at the beginning of the month. So that's a positive. So with that said, thanks so much for watching. I'll leave any links, resources down below to TradeZella and other resources that I use to track, journal, and even trade. And I'll see you guys in the next one. Peace.